So the market was closed today, but it will be open tomorrow, but will close early. It will close tomorrow at 1 p.m. Eastern Standard Time. But I wanted to go over a cover call option that I did do on Wednesday, and also just give a quick little update on my spreadsheet. Hello my friends, this is Legend. So today we're going to go over a call option that I did do on Wednesday. And since the market was closed today, there was no trading, but tomorrow there will be some trading up until about 1 p.m. Eastern Standard Time. So I'm hoping to be able to sell another call, as the first one here that I made expired worthless. And the call that I'm talking about is on SPY. I had been assigned the put on SPY, which assigned those shares to me at $6.78 per share. And that was in this area over here when we were coming down. And I had told you I was not too worried about getting assigned those shares because overall the market does want to move up. And any time that you start getting a little freaked out about the market dropping, sometimes you have to step back and look at the big picture. And what I mean by the big picture, I look at that 5-year chart right here. And as you can see, that 5-year chart sitting at the beginning of about 335 and now sitting at 679. So overall, the market wants to trend up. So even though I would get assigned and the market's coming down, I'm not too worried. Now, could that mean that I might be holding them for a while? Sure, it could. But as you can see, we did have another move up this week, and it did get above my previous price that I owned these shares at. And I owned them at $6.78, so I ended up selling a call at $6.80. And that was a 0 DTE, or days to expire, option trade. And that paid me $101 for that trade. Love it. And since it did not close above the $6.80 on that call that I sold, I did not have to sell my shares. It closed under the $6.80, so therefore I keep my shares. I already made the $100 and I get to do it again. So come Friday, if this one here is going to stay above that $6.80, I'm going to be able to sell another call. Now this is after hours, so the option chain here is going to be a little out of whack. It's not going to show the true numbers, but just for fun, I'm just going to show you at November the 28th, which will be tomorrow. And it will be a short day. Remember, it's going to end at 1 p.m. And I own my shares at $6.78. And this is the call side here. So I can look to possibly, even at the price that it closed at, and using this as just an example, a $6.81 can earn me a little over $100 just at that close of $6.79. Now you can see after hours we're sitting at about 680.37. Now that doesn't mean much because the market could drop or it could shoot on up come opening Friday morning. And if it does move up, then I can sell a close to the money call, earn some good premium, and if they are taken away from me, I will get that price appreciation from $6.78 up into that call strike that I just wrote. So I'll probably end up selling a call if it's going up close to that money, and I could end up losing out a little bit on the price appreciation, especially if it's moving up and I sell a $6.81 and say it closes at something crazy, say $6.84, I will be selling my shares at that $6.81. But remember, I bought them at $6.78. So as you can see, that would be a $300 price appreciation plus any premium that I did earn. And the potential that I did lose would be from $6.81 up to $6.84 if it did close all the way up here. But you can't sit around and wait to see if it's going to go all the way up here, right? You have to decide, make your move. As long as it's above what you actually paid for it for, then it is a win, right? And if your shares get sold, so be it. Turn around, and once it starts moving back down, sell another put. And you just keep doing it back and forth, back and forth. And it is somewhat like doing the wheel. And the wheel is where you would sell a put, get assigned those shares eventually, and then you sell a call above your strike until you eventually get those shares taken away, and then you just do it all over again. And that's a strategy known as the wheel strategy. And you can look that up in YouTube. There's plenty of videos on that strategy, and it's not too bad of a strategy to do. So it is a good way to also sell options. And that's what I'm doing here on SPY. I'm selling puts and I'm selling calls, making money and having fun, right? That's the name of the game, right? Make a little money and have some fun. But so far, it looks like we're moving up, and I just hope that come Friday morning, this thing keeps moving on up, and I'll be able to sell that call close to the money, meaning close to that price that it's currently at that time, and earn even more price appreciation along with that premium. That would be awesome. And the last thing I wanted to also go over here is just a quick little overview of my spreadsheet. As you can see, we left off here. We've got CONY, ULTY, and SMCY that are still red. Therefore, if I were to sell my shares at the current price, I will lose money on those three. For CONY, I'll lose about $700. On ULTY, I'll lose about $100. And SMCY, about $60 here, right? Close to $70. But for the ones that are green is the ones I will actually make. And PLTY, I'll make $1,700. NVDY, $100. MSTY, $3,500. AMDY, $800, and so forth, right? So when you take and you add them all up, and on my spreadsheet, it does allow it to add them all up, and that total here would be $15,983.07 in the good. So even if I were to sell out of every position I have of these high yield ETFs, I'm looking to clear $15,000 for my time. And that's not too bad. And I am still fighting on CONY, ULTY, and SMCY. And HUI was red previously. As you can see, now it is green because the market price actually did move up to 56. But the whole time it was lower, I was still lowering my real price per share here. So that whenever it did move back up, I'm now in the good. And you can see this is a perfect example because if we look back on my individual sheet for this one right here, I purchased them at $56.50. All right, that was my initial purchase, $56.50. And as you can see, since the current price being $56.16, I would still be red. But since I was purchasing under my real price per share each time, all that was doing was bringing down my real price per share right here. And eventually it's moving down toward that price while it was at a low point. And when it does turn around, as it did here, HUI turned around and went from that $47.06 right here, as you can see on the chart, and that's as low as it actually went. And then it actually moved back up to 56. But my purchases, while it kept going down, has ended up helping me get ahead of it, right? And that's what I keep stressing over on this, is you must keep fighting to bring down that real price per share or that adjusted price per share, whichever one you want to call it. I like to call it the real price per share because that is my real average price per share, because that takes into effect of any distributions I've earned. Now, remember, I am green in this one, and I have not entered my distribution this week. So I will bring it down even a bit more once I enter that distribution. And that would only lower this even more so that if HUI does come down, say to 55, I'm now still good, right? And that is how you work these. You cannot just continually to buy at any price all the time, because averaging up on these high yield ETFs will wreck you. Because if HUI was to keep moving up 56, 58, 60, 62, 65, and you keep buying, then eventually your adjusted price per share here is also rising, right? And say this 54 now becomes closer to 60, and HUI's price may be at 66, right? And you're looking, you're saying, well, I'm still under, I'm good. But instead of rolling this down further over those weeks, you've rolled it up on the real price per share up to 60. And then HUI comes back down to 55 or $50, which you look here on the chart, and that 50, 55 area, that's a pretty good area for it to be at, right? But you've averaged up to 60, right? You averaged all the way up to here, but now the price has come down here and you're back to being red and at a loss. And if you were to sell your shares at that point, you will take a loss. So that is why I do not purchase any shares if the current price is above my real price per share. So therefore, I only average down. And to me, that is the important part of it. And that is my best chance at staying ahead of any price drops that these high yield ETFs may throw at you. So while this thing is moving on up and everybody's loving it, and this thing's jumping $2 a day or $2 a week or whatever it may be, and they're averaging up because they're buying into it, right? A little bit of FOMO, trying to buy more shares because they see this thing going on up, and then all of a sudden it turns around and it drops back down, and now they're under. Whereas for me, this thing's moving on up, I'm not buying any shares. It keeps moving up $2, $3, $4, $5 a week or 2 weeks or whatever. Guess what? I'm still not buying any more shares. Why? Because my adjusted price per share is under that current price. If that current price is moving up to $60 and $65, I'm not buying more shares because I do not want to average up. Now, my real price per share here doesn't stay at 54 because all those weeks as this is going up, I'm still earning a distribution, which is bringing it further down. So this thing can go up to say 65, and my real price per share, I might be down to 50 by that time, or even lower, 48 or something like that, right? I'm just throwing numbers out there. But as I'm saying is, even though the price is rising and everybody's buying more shares, I'm not buying more shares. I'm just allowing those distributions to pay me back while it's moving up. And if it did drop and it dropped below my real price per share, then I can buy more shares because just off of that purchase, I will be able to average down as well, along with earning those distributions. So that's why it's very important. And if you're not tracking your real price per share, please find a way to do that if you do not want to try my spreadsheets here, as these are available in my Discord. And it would be a blank one, right? So that you can fill out each individual stock that you're tracking, get your very own adjusted price per share, and then it will populate the summary page so that you can track yours. I mean, it's nice to see mine, but wouldn't you rather see your activities and your positions? I would think so. But when all said, please make sure that you're tracking that real price per share so that these do not wreck your account. So check out the Discord link in the description and in the pinned comments if you're interested in joining my Discord so that you can get a copy of this spreadsheet so that you can track your own positions and find out what your real price per share is. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button. It'd be much appreciated. And as always, I am not a financial advisor, and this is not financial advice. Please do your own due diligence before you get into any stock plays. And for everybody out there celebrating Thanksgiving, I hope you have a great rest of your Thanksgiving day and a safe rest of your week. So until next time, Legend out.